Hello, this is Huskins, your Forex mentor. Welcome to the daily review of April 22nd and the preview of April 23rd. April 22nd was a very interesting day in the markets today because the US dollar index made multi-year highs today, but did not close high. All right, and the preview of April 23rd. A little hint, we have 4 awesome trades coming up tomorrow. Your daily dose of events that shape the Forex markets. Fear has 2 meanings. Forget everything and run, or face everything and rise. The choice is yours. Now our official results on Friday are 0 pips, but if we follow the trade plan blindly without being a thinking trader, you would have made 50 pips. Now, Rick explains why it would have been a no trade, and we do not use no, could have, should have, would haves in our trade results page. So our trade results page are as is. But I would like you to take some learning out of this, that if you just follow the trade plan blindly, you'd have made 50 pips, and here is how. In detailed explanation would have been given by Rick, but at 8:30 we had the CPI from Canada, and we plotted the high before that, and our entire idea was to sell at these highs on the Euro-CAD pair. So we would have most likely entered short right at this close out here, and could have got easy 50 pips. But we did not end up doing that because we are thinking traders. I'd rather have a no trade than not be a thinking trader. So with the benefit of hindsight, yes, we could have followed it for a 50 pip gain, but no, we need to think why we are entering this trade, and I've asked Rick to explain in detail. So you have a look at that video in the members only section. Now, this is statistical wizardry, being aced. Intangible assets add billions to GDP. Now, the data shift gives the GDP 3%. The US economy's GDP. Now, what basically they're doing is that they're capitalizing research and development, and also entertainment and literacy and artistic originals. Now, let me try and explain this to you. Normally, let's say if you make a movie, all right. So now that movie is an expense, and then the income which you make from that movie is what gets counted towards the GDP, right? But now the expense which USA would have said, okay, it spent, let's say, $10 million in making this particular movie, they say no, now that is capitalized. So now we are counting income which is generated from that movie, plus we are capitalizing the movie itself. The logic is that the movie will continue to make money forever in terms of royalty. So because it's going to continue to make money forever, it's no longer an expense, but it is something which needs to be capitalized. I'll give you another example which will be a lot more which will drive home the point. Now, at present, R&D counts as cost of doing business. So the final output of an Apple's iPad is included in GDP, but the research done to create them is not. R&D will now be counted as investment, adding a bit more than 2%, approximately about 3% to the measured size of the economy. So any R&D, even when if you are not very sure whether that's going to go towards some tangible benefit, you're going to count that as investment and not an expense. If it's an investment, that means it gets added to GDP. So just a little twisting around what the GDP is. And now, why is this important? Because this is going to change everything about the way you know your economy, where the stock markets are headed. Let us say that the stock markets are multiples of the GDP growth. So now the GDP is automatically 3% higher. So what would the stock market do? Go 3% higher. And let's say that you have CPI tied up with the GDP. There's so many. You have the debt, tied up with the GDP. So now GDP is growing. All those equations are affected. Now, global leaders see some economic improvement. Now, this is very interesting. Leaders of the group of basically the G20 nations ended a weekend of meetings in agreement over the general state of the world economy, but failed to resolve differences between large nations on how to proceed. The IMF's policies setting committee said countries must take decisive steps to nurture growth and recovery, but there was a considerable disagreement on which path to take. The commodity that is shortest supply now is confidence. Now, basically, what does this mean? It means that you might start seeing countries now window dressing their economies so that they appear stronger than they actually are. That's what the take-home message is. Very subtly saying that the what is lacking is confidence, and not the real economy is good. It's just that people lack confidence. In my opinion, big BS. Now, a very important thing which we learned over the weekend is that the global leaders gave a reluctant green light to Japan. The key word out here is not reluctant. The keyword out here is gave a green line to Japan. So basically, I've always mentioned that the USD JPY is going to go towards 100 and now even towards 105ish. That has just been confirmed because the other in normal circumstances, everyone would have cried fall, Japan, you cannot do this, blah, 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 blah. But now what has happened is that they are allowing Japan, yes, you can devalue your currency. That's in effect what they are saying. Now, Fitch downgrades UK's credit rating. Now, basically, Fitch is the second rating agency in 2 months to reduce Britain's top credit rating. Now, Fitch citing a weaker economy outlook as it lowered the rating from AAA to AA+. Now, let us visit the Dow and the gold. Let me pull up the charts really quick. Now, this is the gold chart. Okay. It has made recoveries about 100 points, a bit over 100 points from the lowest low out here. All right. But you look at the recovery, it's not strong. What's not strong? You see big wicks out here. All right. So there are fundamentals backing the price of gold, but the technicals are not. What I would have liked to see is I would like to see the price of gold. I'll show you what you get when you have a bullish run. So look at this run, was bullish. So goes high, closes near the high. Goes high, closes near the high. Goes high, closes near the high. While as when it goes down, and then no, I don't want to be down. Goes down, okay, this closed, near the lows, but the next day goes down. No, I don't want to close. So these are the places where you actually end up buying. While as Right now, what you see in gold is that it closed down, stayed down. But when it went up, it did not have the tendency to close near its highs. So my idea of gold is that it might try to go up and then it will try to come down, try to take on these lows. And if it manages to take on these lows, it will see new lows. If it cannot take on these lows, then that will be our indication to get long into the market. So that's about gold so far. But I'd like to share with you, a bit analysis on the gold beyond is just technical analysis. Thailand says that many gold shops have temporarily closed down. Now, basically, they just the way it works is that the people who want gold, they went to Thailand and were buying a lot of gold, so the shops had to close down. South Africa, massive, massive, massive buying spree going on. Australia, it's just like sales after Christmas. Dubai, gold coins and bars are in short supply. Um, Nearly every place you go, there is Hong Kong, for instance. The Chinese Gold and Silver Exchange, which is a century-old institution, nearly ran out of gold. It's waiting for its deliveries from Switzerland and London. India, this is a person says, in Zaveri Bazaar, which is a gold market in India, says that my sales are 50% more than it were last year, and they expect gold fundamentals, the physical gold to hold. People are going nuts and buying physical gold right now. So that's something which you need to bear in mind, that unlike other you know technical instruments which you see, gold is a real commodity wherein which people will actually go to the streets to purchase. So sometimes what we look at technical analysis will not hold in terms of gold. So that's about gold. Let me draw your attention to Dow. Okay, so now this is the Dow market again. The Dow Jones. Let's look at this. This trend line is still holding on. It is still strong. So we are still in a bullish trend, and it is responding from this particular trend. So anybody who tells you that the Dow's run up is over, even though fundamentally it should, but technically we've not yet seen a correction on this. So my opinion is that we might see the Dow try to inch up and might try to take out these highs. If it fails to do that, then we might see new lows. But my opinion is that it will try and take out new highs, will get a lot of folks interested in the market, and then it'll crash. So that's what my opinion on Dow is. And preview for tomorrow. Let me pull up the members only page really. All right, so we have tomorrow we have 4 trades. One is at 8:30, which is the Canadian core retail sales. I think I might give this one a skip because we have the governor speaking 15 minutes after this report, because we also have the US new home sales. Now this is a go ahead, and then we have the New Zealand interest rate, which is a go ahead, and then we'll have an Australian CPI, which is a go ahead. So right now I'm going to call off on the Canadian core retail sales. You may want to trade it, may not want to trade it, make your own independent decision, but I might choose to stand at the sidelines. So that's about it for tomorrow. Have a wonderful day and email me if you want to get in touch with me. I'm available and I'm at your service.